Duty. Hey, great. Anyways, yeah, it looks like it's going to be all week long at least. Hopefully it goes a little further. Can't talk about it, but it's a RICO case and burglary and what's the other one? Um, oh, forgery. So that's about all I can say about it. Anyways, uh, doesn't look like it's going to be over anytime soon, even though we got out a little bit early today. Uh, Looks like we'll be doing this thing all week, but I wanted to give you guys something that obviously I'm not monitoring the market during the day because I'm on jury duty. It sucks. Anyways, um, I got better things to do on my time than deal with something like this, but it is what it is. Civic duty. You do what you can. Get in there, get out, get paid a whopping, I think it's $30 or $35 a day. Woohoo! Yeah, be able to put some gas in the tank. Anyways, so going down through what's been going on just over the last couple of days. Obviously, no profits. We haven't taken any profits as far as sales go. Let me get that up here. We can see we've been in a down move. Obviously, no profit, right? But we're still collecting those dividends. So it looked like we about exhausted all of our alerts, even though we keep putting on new ones. Remember, the scan was fairly short. I don't know that I posted the scan for you guys on other platforms, but let me do that real quick. It was very small. So it looks as though the only one we're lacking is Kellogg, CVI, which is a energy, ADC is a monthly payer, and GEF, I'm not sure exactly what they are, but sometimes I put this out for free for folks so they can get a better idea of, what we're doing, maybe learn a little bit here. Don't just try to go off of this information if you don't know what it means, okay, or how I use it or how you should be using it. If you get the basis down, then you can add to it, but never subtract from the basis of it. You got some folks that are using it that have put some neat little spins on it using what do you call it? Hold on a second. That's not what I wanted to do. Let's see here. Trying to stop this advanced screen switcher here. There we go. So yeah, so now you can see, some information there for you. We'll just keep it on this screen, go down through a few of them. CVI, ADC. I'm using the pullback strategy, so we're looking at this column here, the limit column, and we work from there. So we use this as our alert. We hit the alert, we come in, we use the dividend amount to trail it, and we forget about it. If it hits, then we try to target the dividend for our profit. It's that simple. The simplest one, that would be the last, that's the close on Friday. All you would do on Sunday is put all your orders in, 41, 45. You have under 100,000, you'd be using 4 shares, right? So you buy 4 shares at 41.45. That is buying on the close on Friday. That would be this last Friday, which would be, what was the date on that? That would have been the 10th, okay? And the same goes for the ones below it. So your max shares, they dictate your risk, okay? It's a real simple formula. You can probably figure it out for yourself. But now the other one would be the buy on the limit, right? And so we use 39.85 instead of trailing it. What we do, we go 4 shares at CVI. We put a buy limit in at 39.85. It comes down, hits it, you're in. Now you use your dividend amount as your target price. So 4 times $1.60, you're looking about, what's that? $6, 6.20, 6.24, somewhere around there. Anyways, same holds for the rest of them. So that's a real simple breakdown of the simplest entries. Now, if you're looking at these Vegas, you're looking at the, you're using this for movement. Okay, this is similar to volatility. This is how I just use that terminology, as a lot of people that are in options trading understand. It has a close correlation to the movement based on the S&P, SPY, all right, and how it moves and how fast. So the lower the number, the less it moves. The higher the number, the more it moves. That's just price per week. That's not price per minute, price per day. It's based on weeklies. So enough of that. We'll go on to, we haven't got anything going on with Bitcoin. You can see that it is, there's a lot of discussion out there with old Sailor running his mouth, saying, oh, he's not going to get margin called. Whatever. I don't care if he gets margin called or not. It makes no difference. So if you're following the news on it, it's going to make for great fodder, but who cares, right? We're not going to get involved in this, and we haven't been involved in this since May or March. I think it's March. If we go back down, let's see. Yeah, March 27th is the last time we took profit on it. Okay, we'll continue to buy, but I haven't put a buy order in because we haven't had anything show up that fits our criteria. Okay. Of course, there's no CEFs this week, and you can see that we're still ranked fairly high. I don't know why that's off to the side there. I need to fix that. You're only seeing part of that screen. Let me see if I can bring that in a bit. Yeah, there we go. That looks better. Now you can see, so we're still beating the S&P by 16%. That's what you want to be doing. You always want to be above the S&P. If you're doing that, you're going to be a winner. If you're below that, you're going to be a loser. If you're right with it, you're going to gain what the S&P gains. It's as simple as that. So if you don't believe that it works, all you have to do is look at that. You need to pay more attention to these things when they get put up on the screen. I don't know how well that's coming through. Leave a comment below or shoot me an email. I don't check comments that much. If there is one that comes across and I catch it, that's fine. But otherwise, I use rudimentary stuff here, guys. I'm not into the high-tech stuff. All right. We don't know what TipRanks is doing with the rankings. If I'm just under even with my portfolio, then how am I ranked at 290? You mean there's people making twice as much, or they're up 20, 30, 40%? Who knows? I have no idea how their algorithm works. But I just want to let you know, I hadn't forgot about you. We're still working on no losses. We go back up here, so it's 735 days now. It's over 2 years. I don't know why this thing didn't, this should have been 447. So 447. So unless we get the trial over with this week, there won't be any forthcoming videos. Maybe I'll update you if I can. I got out early today. So we'll continue to, oh, this needs to be changed to 322 because it did pay us. Let me get that up here. Where is it? 322. So 322, these are dividends that have been paid. I'm sorry, that are accruals, 322.47. But yet they have not been paid. The dividends paid come straight out of the dividend accruals account. If you look on some platforms, don't have that option, but you can find it. Interactive Broker is real clear on their statements, so you know exactly what you have. We just had a huge amount of dividend payments yesterday. I think there was, let me count them, 2, 4, 6, 8, 10, 12, 14, 16, 18, 21 for ex-dividend yesterday, and we had 2, 4, 6 today. So there's going to be some more money ramming in there, of course, and obviously they won't be paid. They have pay dates on them. You can go back over here to your, let's see, like the dividend amounts. Let's see if it highlights it here. Yeah, so you can see like GHY, if you're not familiar with the ex-dividend date, that's the date that goes ex-dividend. That's not the day that you get recorded, and that's not the day that you get paid. But you look at the record date is going to be like this one in particular on the 16th, which is 2 days from now, goes ex-dividend. It doesn't record that information until the 17th. So unless you own it on that day, do not sell it the next day because you will not get that dividend amount. All right, you have to wait till that record date, and it doesn't matter after that. Once June 18th is there, it's just a safety. Wait till the 18th, then go ahead. You know, you can do what you want at that point because once it's recorded, you will get paid. Now you go down through, if you don't know what's going on, it's best just to, you know, hold it. But if you can get the full year's dividend, right, which would mean, you know, that $1.26, and that's the full dividend amount for the year instead of 10 cents multiplied by, in this case, 58 shares. So you're going to make about $5.80. Is that right? Let's take that. 126 by 58. Yeah, so you make $73 if you cash that out, right? But on a month to month, you're making, what was it, 0.105 times 58, so you're making $6.09 each month. So it's one of those things you have to look at, and if you structure your portfolio correctly and you monitor your positions, you'd be like, okay, well, that's what I'm targeting, $1.26 away from, right, my average price. So your average price $15.76, in this case $15.77. Multiply that by 58 and you come up with 70 bucks. So this is what we're trying to do. That's just in a nutshell. All the rest is strategy. You can see that our cash in this particular account is down to 18,775 because we've been buying, right? We had 10 yesterday, we had 8 buys today, and we'll continue to exhaust that until we're fully vested. But the dividends just keep coming in, so this keeps on growing, even though you're going down. I know it's counterintuitive, but people seem to think, oh, you're just going to lose all that money. It's like, okay, you just do you, we'll do us. So just looking around at some of the other positions, see, we had a few that were green today. Nothing to write home about. You're not, by looking at it, you're not going to change the direction of the market. Just let it happen. Looked like we picked up MCD. Well, that's probably been in the portfolio a while, or did we pick it up yesterday? I can't remember. Looks like we picked it up yesterday. Anyways, BTZ, yeah, nothing really to write home. Look at that other. Oh, that's just one of the portfolios. Let's look at all of them. We'll figure it out. AIZ, that's another one that's nice and close. Some of them going back up. Yeah. So yeah, lots of people going crazy right now. Lots of people don't know what to do. We've known exactly what we're going to do, and we stick with it. We stick with the plan. We don't alter it. We don't care what happens. It can come on down. Hey, if we hadn't taken a loss in 2 years, so if we take a loss, hey, that's fine. We're good with it because it's not going to be one position that we lose all our money on, right? So if one of these companies goes out of business, is paying us dividends, we have less than 1% invested in each company, and this is what we're aiming for. Now it goes up the more that you buy. See here, this is 0.296% of our portfolio. It's not based on a dollar amount. It's based on the size of the portfolio. Don't get them confused. Okay, all these numbers are different. You notice that? Some people are like, oh, I want to put 500 in this, 500 in this, 500 in this, 500. You cannot weight each company the same way. You cannot do it that. You can, but it's not going to work out for you in the end. Like, trust me. I've done it in the past. It didn't work. You just end up losing more on each position. This is why you base your risk on the size of your portfolio. Once you get up into the bigger numbers, this is when it really, really makes a difference. You know, you got 25,000, you don't have to sweat it too much. But if you understand the rules now and you use this type of strategy, your chances of losing big amounts of money are really low. That's what we're looking for. Really, really low odds of losing. All right, that's what we want. We don't want high odds. High odds are, 50%. That means you're taking a 50% haircut on your portfolio. That means anything that you put out there, you're like, well, I have no idea where it's going. Well, hey, I don't know where it's going, but I'm not going to take a haircut on one position of 50% and knock out. Now I'm down to 12,500 because I have one position. It's called diversification. Keep your stuff diversified. My scans allow us, and I've shown this in the past. I'll put it up again if somebody should need to know. But think about how diversified these portfolios are. What are the chances of them all going out of business at the same time? That's the end of the world, right? Well, we don't talk about stuff that it's a possibility. What's the probabilities? Really low, right? If it happens, guess what? Everybody's in the same boat. Stop worrying about stuff that people scare you with. Oh, nuclear war. Oh, this is going to happen. Oh, Bitcoin's going to the moon. Hey, it's always headlines that will screw you in the end. If you follow the news, you will lose. Anyways, I don't see anything that stands out here. Looks like we got a trailing going on Pepsi. It's almost down to our third level, which is fine. You don't understand this, you got to learn it. I'm not going to sit there and explain it every single day. We're getting close on a lot. Looks like, a lot of weakness in the market in different sectors. Doesn't mean a hill of beans to me. I don't care. Come on down. I just buying stuff at a cheaper price. And we still got plenty, we got $4,800 to go back in on this account. Or accounts. Let's see what each one's holding. Like 1,365. And remember, we're not adding any external money to these accounts. 34.51 on that. So the sooner I get vested in these, the less work I got to do. All I have to do is sit back and collect. If money comes in, now I'm looking on my scans in the future. This thing can bottom out wherever it wants. I don't care because I'm going to get paid what my portfolio is going to allow me. So if we take a quick look and see, this portfolio is making 6.88%. If it goes down 50% from here, we'll be making 12. Right? That is a unrealized because you have to take into account how far down you are. So that wouldn't be entirely accurate. But if you're still buying and selling, you're going to have a market start to move up, and then money's going to start coming back in, and then your occurrences go back up. So we've had quite a few occurrences. It's just on the buy side right now. So chances are the longer this stays down, the faster it's going to go back up. But we have no idea, so we don't plan. Don't say, oh, hey, I'm going to put in my savings from 5 years ago, but I don't have any extra cash left over. The investment money is not to be touched. You have to keep your hands off of it until you're ready to either retire or to make a cash lump sum out. But the whole idea is you're making this money work for you for the rest of your life. The less you touch of it, the faster it grows. And then you get to a point where it's like, hey, I want to take out $1,000 a month, and still have principal. And you never get rid of your principal. You never lower your principal. Hey, life happens. But if you're not debt free, you'll constantly be eating into that, and you'll just it's still better than sticking it in the bank. You'll still make some money off of it, but if you're trying to live off the principal, it won't be around long. You cannot touch the principal. Everybody has different levels. Everybody has different, a different place they're at in life. If you're 20 years old, if you're 16, you could be 70. Everybody's got a different thing. You have to figure that out for yourself. I'm not a financial, I can't get paid to give advice, not licensed to do that. So make sure that you understand. I mean, I'm trying to show you on a basic level what can be done with this. If you get it, you'll never have to worry about cash again. It will always be coming into you. That's just the nature of dividends and the nature of compounding interest. Because once your money makes interest and it goes into your account and you buy something else and it starts making more money and you start getting paid another dividend, you just compounded your interest. Multiply that by thousands of occurrences per year and you can figure it out from there. But anyways, hope that helps everybody. Hopefully this court doesn't take as long as they say it's going to take, and I'll be back at it. Anyways,